Welcome, everybody. It's just about time to start, so let's do so. I think this is the last drills class of this month. There might be one more, but anyway, I'm going to treat it like it's the last one because I have a lot of material to cover, and I want to review and also give you some new stuff at the same time because in this particular space, the space of drills, that's really important in my experience. Welcome. We have a couple of guests joining us. Welcome, TRG members. If you haven't been to the other drill sessions, that's fine. That's why I'm going to start with a quick review, and then we will go from there. And so I want to talk about a couple of things first, and then I'll go into some specific drills that I already talked about just as a quick review. And then I've got a couple of new drills. I had a new one last week that was fun. I've got a couple of those. And then I want to give you some other resources. There are actually some decent resources out on the web for doing drills, and we'll wrap up with those. And I'm hoping to get this all done in a half an hour. We have the closing session today for TRG members. It's Friday. There's a whole bunch of options expired, a whole bunch of stuff going on. The market's been volatile. We should get a really good Friday close session. So I want to be rested for that. So we will not drag this out. This is a very practical, simple subject that's easy to go fast. So put questions, comments in the chat. I'll stop or slow down if I need to based on that. Otherwise, we'll just power through it. Okay, first thing I want to say, I want to repeat this over and over and over and over and over. It's really frustrating to me lately. I'm 63 years old. I have been trading since I was 13. I started trading options when I was 13. I have seen all the nonsense in the markets. I've forgotten more than most people know, and I'm not saying this to brag. I'm saying there's just so much BS. And if you just make it simple, that's our mission is to remove money from the market. Our mission isn't to be right. Our mission isn't to have the most followers on Twitter, or our mission is to take money out of the market. The purpose of doing drills is to get better at that. This is a learned skill. Trading is a learned skill. Like any other learned skill, it takes lots of practice. And the further you go, the more you'll realize how much you know and how much you really don't know. And you'll realize that you constantly need practice. So that's what drills are all about. Having said that, it really bugs me that, I saw an example of this yesterday. Somebody will, get 3 or 4 years of a trading experience, think they're a genius, and start spouting things that are just not true. And we saw that in a webinar yesterday. And in the drill world, that exists as well in this sense that there's a right way and a wrong way to do a drill. If you're doing a drill, this is how you do it. And, the one-tick drill is done this way. Nonsense. There's no right or wrong way to do this stuff. It's about you. Make it work for you and ignore the noise. That's the message there. Okay, moving forward. Quick review. One-tick drill. And by the way, I'm in my sim here so we can actually do some of these. My favorite one for new people is the one-tick drill, just because it's the best way of learning how short-term order flow works, particularly in ES and MES. I wouldn't do the one-tick drill anywhere but ES, MES, or in the bonds. It has to be something that's fairly thick and doesn't move very fast. But when ES does get moving, it does move fast, which is why it's such a great place to do one-tick drills. Real quickly, your objective in a one-tick drill, from my point of view, again, other people do it differently. You're welcome to do it any way you want. My reason for doing one-tick drills is I want to practice getting good entries. I want to be on the money getting into the market. And I want to be wrong clearly when I'm doing it badly. So what I do when I do one-tick drills, I put a little bracket up, and it's called 1TD, and it basically just gives me a 1x5 or a 1x6 tick bracket. And so your mission when you're doing this, you can use limit orders, you can use market orders. I like to use market orders because it forces me to be aggressive. Like right here, I think it's I'm going to go for a long one tick. You can see I've got a one tick target on my limit there, and then a stop that is just, there's no fixed distance for that stop. It's just, if I'm wrong, it'll get there before it gets me a tick here. I traded on my tick. I have not filled, but it's trading there. Let's see if we get a fill. This is just an example. Boom, got it. Okay, using a market order. If I'd limited into that, I would have had a little more room because I would have the spread to work with as well. I was already disadvantaging myself for the spread there by taking the market, but it worked. So my read was good. That's the purpose of doing a one-tick drill. Practice getting good entries. See if you can, and it works the best in ES in my view. See if you can do one-tick drills in ES. It's 12.50 a tick, right? See how long it takes you to get to $500 of profit. And, use a 5-6 tick stop, or, whatever. You can stop out faster than that if you want, but it's really about getting entries and getting a tick. If it goes that far against you, you probably were wrong or you got swept. And both of those things are instructive. When you're wrong, it's really obvious. Like you would have been wrong on that one right now. Now we're pushing down. But this push down started with a sweep, and often sweeps reverse right away. So that's one of the reasons this is such a good drill. Okay, that's the 1 tick drill. Number 2, and this is a drill that I just invented a couple of weeks ago for practicing trading ranges, because a couple of people that I have been coaching, I realized that the definition of the range, they get very focused in on the LRCs. And if you were in the Jigsaw class a couple of days ago, I was talking about how the trick, the LRCs are like training wheels to show you the recent range statistically. That's fine. But if you really want to practice the range, just reset your dome and start with a clear slate and let it build you a range. Right now, I reset everything and I centered it. So that's where we are here at 59.50. Let's let ES define a range real fast, and then we'll trade it. We could cheat and say, well, the top of the range is 66, the bottom is right here. And yeah, okay. But if you watch the traded volume instead of the statistical interpretation of the traded volume, you can learn how to read what's happening. Like right now, this is getting sold, but so far there's buyers under it. And again, that's why it is the edge of the range. There's liquidity right here. So when I do this drill, and again, this is one I love to do in NQ, not just ES, but what I'm doing is I'm looking to let the market build a range, and it does it faster in NQ, obviously, because it moves around more. But you can see we're getting one kind of laid out in front of us here in all the instruments since I reset it. And right now, that's a decent looking little bottom there in NQ. It exhausted and got absorbed. So right now, that's the bottom of the range. And the top isn't quite as strong as that bottom. See all that volume right there? So that's the range right now. So once you've got a range defined, and you can see the LRCs pretty much agree with that, then the range drill is real simple. When it gets to the edge, you have to play it. You can play it either way. You can short it for the breakdown, or you can buy it for a move back into the range in this case. And on the other end, if it's at the top, you can do the opposite. It's totally up to you. The trick and the reason this drill is really useful is it forces you to understand how the boundaries of the range trade. And this is where a lot of newbies get screwed up trying to swarm. So this is a really good drill for practicing edges and ledges, because it forces you to trade. It forces you to make a directional decision and then either stick with that decision or stop it out and go the other way. So that's my range drill. I talked about this again in a previous session. That was just a summary of it. And the objective in this drill is to have the MAE be as low as you can keep it. It's not about how much money you can make. It's about not losing money, because you're learning to see the range real time. That's what you're doing. Okay, that was number 2. Number 3, I did this. I also mentioned this one last week real quickly. Again, we're reviewing the freedom drill. This is really, really good if you are a structural trader that doesn't really like scalping and price action, or conversely, if you're a price action guy who doesn't like structure, or pick any style of trading, Fibonacci, MACD crossover, fib, I said fibs already, pivots, whatever, name any of those crazy things out there, right? What your objective in the freedom drill is to do is to trade one of the other styles. Trade the other way. Try to trade price action if you're a structural trader. And what it will do is it'll force you to challenge yourself. It'll force you to think outside the box. And this is really powerful. Having said that, this one tends to be better for people that are a little farther along in their development. The 1 tick drill is great when you're new, because it helps you get good entries, and that, particularly if you're a scalper, that's really important. But even if you're trading, ranges intraday, if you're trading swings, good entry isn't as critical, but it's still important and it's great practice. But the range drill forces you to think about the range in terms of a short-term boundary, and the freedom drill forces you to think outside of your normal way of thinking. Okay. So that's a quick review. Again, no right or wrong way on any of them. Now I want to talk about some new ones and give you some more resources. And I'm running right on schedule here. Again, the objective is to go fairly quickly, just give you a lot of good information. If you have questions or comments, by all means, throw them at me. But, one of the things I find, I keep coming back to this in my head over and over again, and it's a really hard thing for me to reconcile. Again, yesterday, some of you may know which one I'm talking about. There was a webinar that I watched with a couple of other people, and I was just stunned. There's 500 people following somebody that doesn't know what they're talking about, and most of the crowd, newbie, people that don't understand futures trading at all, think this is an expert, and it's mind-boggling. Blind leading the blind. And so I'm watching this, and I'm thinking over and over again, this is such a challenging space to educate in. And so with that in mind, I really want to stay focused on what is the purpose you are here for. If you're in the market for any reason other than to take profit out of the market, then something's wrong. That has to be your focus. So doing that is a learned skill. There's no software you can buy that will do it for you. There's no mentor that's going to show you a simple way to make money, $1,000 every day. It doesn't work like that. You have to find an edge. You have to find something that over and over again you can do profitably. That's an edge. And if it has a statistical backing, like the structural inside out or, initial balance breaks, those kinds of things, or if it has a statistical power in price action, more like what I do, which is, I'm at an extreme and, I may be wrong, but the odds are really good because it's extreme. That's how I tend to play. And that's a scalper's kind of look at the world. So put all that together and think about, okay, I'm here to be better at what I do. The first thing you have to assume is that everybody out there profitable is better than you. You have to constantly reinforce that in your brain. And the only way you can play in their arena is to practice, 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 practice. Okay, so here are two new drills. Actually, I said there's one. Here's two new drills toward this. And then I'm going to give you some other resources to work with. And I also, as I'm talking about these two drills, I want to emphasize something I posted in the pit about the class this morning. I think the most powerful way to use drills is to build your own, because everybody's trading has its own strengths and weaknesses. And your first mission as a trader is to be self-aware enough to know what you do well and what you don't. And coaches can help you with that, but it's really on you to get that, to at least get on that path. And again, if you're not even thinking that way, then you're stuck in retail trader world looking for the next indicator. And that's a huge mistake. Discretionary trading is about reading the market. Drills are about practicing reading the market. Okay, so here's two new drills, and one that's particularly poignant in the last couple of days, the sit on hands drill. This doesn't mean you just stay out of the market. This is, again, one that I developed for me, and I think it's really useful because I tend to like to trade a lot. Sometimes I overtrade a bit. That's okay. I've accepted that. Here's how I practice not doing that. You guys have heard me say for years here in TRG that I look for setups that are what I call ace-king. And like the poker hand, a suited ace-king has the most options on the flop. It's the best starting hand in my world of playing poker. Better than a pair of aces, even though the odds on aces are slightly better. I like ace-king suited. Okay, so having said that, the sit-on hands drill is see how long it takes me on any given occasion to wait for a good setup. And on some days, you could wait all day. And that's why the sit-on hands drill is so useful. When the conditions are normal, I don't do this drill. Okay? So, and we talked about this last week a little bit. We've talked about it in the pit. Normal conditions, you do normal drills, like one-tick drills. You trade the range. You do freedom drill. Do something different. Practice structure. That's the kind of stuff you do. When the market is in craziness mode, when we're in the outliers, when we're in the black swans, that's the time that I do the sit on hands drill. I say to myself, okay, there's a lot of action. And you know the days I'm talking about, like when we get a producer price index or CPI or the NFP, an hour before the open, and it's just totally crazy. Doing a one-tick drill on a day like that is useless because the market's moving so fast, it doesn't teach you anything. So what does teach you is, okay, aberrations Outliers are really, really big opportunities. But if you do not be patient, if you are not patient, if you don't wait for it to set up, you don't get your ace king. So what I do, the first thing I do on any day that I am sensing is an outlier day, and this is a relatively new thing, but I built it into my process. I immediately say, okay, I'm in sit on hands drill mode. And every now and then I've said this in the pit, today's a good day to sit on hands at the open. That's what I mean. Because if you just say, is this it yet? Is this it yet? You assume the not. That's how I teach this drill, and this is how I do this drill. You assume that this is not the ace king. This is not the good setup. And then you wait till you can convince yourself this is it. Like right now, we're trading right at the big fat half a whole number at 50. If I was looking for a long, this is a place I would definitely be looking for it. This is an ace king long right now, even though we pushed down pretty hard. Because if you're wrong right away. Give it a few ticks around 50. If it can hold, it's really interesting. If it can't, then look out below. So that's a really good example. I would be playing this. I would be swarming this here. And, I'd probably give it some room. It's probably right about where I would give it right there. And that's why it's such a good drill, because you wait really patiently for a really good, really, really asymmetric setup. And then you have to commit to it. Like this one, I would commit to. I still think this is going to end up being a decent long down here, but you would have to swarm into this. Absolutely. Just for the record. So anyway, that's the sit on hands drill. How long can you wait on an outlier day for a good setup? And the notion is there will be one, but it probably will be later and farther away than you think. And it's a really, really good drill to combine with stuff like not a price rejector and waiting, for UB to completely resolve and become a price rejector. It's that kind of thinking. How long can I wait at a setup that looks good until I'm just absolutely certain it's an ace king? And every time I've done this drill, I've had a ridiculously good winner. The problem I've had with this drill is waiting long enough. It's a real good test of patience. And again, for someone like me with my personality and my trading style, that's a really good thing to practice, because on a really volatile day, instead of, getting chopped to pieces back and forth and not putting up any good profits, I'm sitting there waiting and waiting and waiting. And this happened last week. And then I put on a really small trade at the real extreme and then starts working. I scale into it. And the next thing you know, I've got a 5-figure winner, and that's really cool when that happens. So that's why I really like that drill. Okay, let's see. Let me go back to the. Oh yeah, okay. We're still talking about. I see you guys are chatting a little bit about that presentation. Yeah, that was pretty crazy. Ace king of spades, absolutely. That's funny. I know you're a semi-pro poker player, Andrew, as am I, but I haven't been on the circuit recently. Usually around rollovers. Yes, exactly. If you're trading bonds, you would age faster. That is also true. You can also die of boredom trading the bonds. Okay, so one more new drill, and then I'm going to give you a couple of resources, and we'll be right on schedule here, I think. So I have a new drill I really like, and I would have done it here, but we weren't ready. Now we're ready. It's called the lean in drill. And I don't want to have one tick here, but I do want to get long. And what I wait for an extreme, and this is similar to the sitting on hands drill, but I do it much more. Every time we're at a ledge, I do the lean in drill. I pick which way I think I really want to trade, and I get into the market. And then as it moves away from me, I have to get more aggressive. That's how this works. And then I have to pick a spot where I'm just plain wrong. And so on this particular trade, I'm long at 48 here. And again, I'm committing to this. I'm leaning into this low. So where would I just be totally wrong here? And you got to figure this out, obviously, before you do the drill. But real quickly, let's see, 40 initial balance. God, this would have to go pretty far for me to really be convinced I'm totally off sides here. So let's say 30. For now, okay, and we're trading like 48, so that's a pretty big range. But you can see we're kind of exhausting and building some volume here. So what your mission is to either stick with your commitment of the direction and scale in, or to bail out of it. And this is the one where you're trying to optimize your profit. So again, I like this idea a lot down here. So I'm going to continue scaling, but I'm going to do it really, really slowly. And again, it's probably also a good idea to do this in NQ because NQ moves around more. So in at 15 in NQ over there, let's get a little bit more scaled in over here in ES. It's a little weak down there. You can see that there's absorption here. Can this hold? If it does, then my lean in makes total sense. This one's already profitable, so we can protect it. and got filled. So again, I look at this is why I'm leaning in. There's some absorption down here. There's a lot of volume, but could it push lower? It's right at the edge of the range. This is a really hard drill to do if you're new, but if you're on the path to learning to scale, this is, and swarm in, this is a really good drill. Look at that absorption right there. And that's going to be a key spot right at 20 in NQ. See that? 475 on the ask. Is that absorbing all the buying? At the moment it is. If we get above it, it could get really interesting. So these are both very interesting setups. I'm going to scale so I'm long just below that. And so if it gets above that, it should burp way up here, and that will be perfect. And if the low blows out of the way, if the low blows, I'll get out of the way. But again, you can see this absorption right there. It's exactly the right spot. And you can set up to scale out any way you want. The trick is to lean into your opinion. Does everybody understand why I call this the lean in drill? You can see I'm doing it right now. It's not so much that I'm swarming because we're not going down that much. I'm just saying, yeah, I really like this idea. I'm willing to commit more to it, or I'm wrong. And it forces you to really stay dialed in. Like, is this, now it's 500 here. Is this going to be the boundary, or is that going to be the boundary that forces us down, or are we going to get on the other side of that and just rock and roll back up into the range? So, that could be a really cool trade over here. And if that holds, then we'll get out of the way. It's that simple. So let's throw a few more targets. Here's the bottom of the value area. Oh, look at that. We're right there again. Watch that. Watch the hairball going this way. I'll take a little bit off at the other side of it just in case, and see if we can ride a couple of them up. And if it goes up, see, boy, you can see that level disputed right there. Volume on both sides. It got absorbed down here. That's the big, it's on the ask, so that should be absorbing buyers. But if it gets above that, look out. And so that's what you're doing. You're staying just dialed in, and you're leaning in. That's why I call this the lean in drill. You have to pick a direction, and you have to get aggressive. And again, you can make the rules be whatever you want to define aggressive. For me, I keep it in terms of, maybe a total number of ticks or points or dollars off sides. This one works good with dollars, particularly in micros, because you can get pretty far away and still see absorption, and now that spot's up there, so we can actually take profits on a couple of these before that spot, which is ideal. And then if it blows through it, I've got more to go with runners. So and you can see there's one of those over here too. It's not nearly as aggressively sold though, so that's the one to watch there, that spot, it's right on 20, which again isn't a surprise. It's also a high volume node, so, and most of the high volume is actually that absorption right there on the buy side. So that one's going to be real interesting to see what happens. And of course, you can add other elements into a leaning drill. I add the internals, like I'm watching the tick out of the corner of my eye. The tick pushed down to minus 1,000, and now it's back up to minus 500. So the buying is subsiding, or the selling is subsiding a little bit. And you can see we're getting, the LRCs are flattening out. That's usually a short-term pause in the selling, or it's a bottom when you see that. So, so this is a really good example of the lean in. See how, I'm leaning in, but I'm still waiting a little bit in case the lows go. I might scale a little more. I'm willing to take a little bit off. So I'm really working the idea that this is a tradable low with some aggression, but not, monkey aggression. Does everybody get that? Hopefully, I'll just leave it running and go over to the questions. And again, this is why I do this in sim. It might blow the low out here, but I think this is a really good example of the kind of conditions you might want to lean into. Either way, you could be leaning in short. If you were doing the range drill, you could be scaling in short here. I think we're going to get a little bit of a trade back into the range, which is why I'm doing what I'm doing. So I just reset the dome so you can see the traded volume there. See, all right, now we're pushing down. Let's see if this gets absorbed here. If not, then we're probably offsides on this one and we'll get out of the way. So really good example. See, now the spot I'm leaning into is still trying to hold. And that's why I love this drill, because it really forces you, right or wrong, to really evaluate what's happening. Do I want to take this loss, or is that absorption going to be the final bit of exhaustion absorption that's going to push back into the range? So you're constantly evaluating whether you made the right call or not. And again, I'm not trying to prove I'm right or wrong here. I'm just trying to show you ways to practice your brain. Anyway, we'll just leave those up for fun and watch them. Let's go back to the questions, comments. Lean in, John Grady. Yeah, John Grady does something similar. In the bonds, you can really do that. And I really like this because, again, I'm still committed to this idea. In fact, at the moment, I'm going to get a little stronger into it because I really like the fact that it's not going down anymore. So here we go. And again, see, it forces you to be patient. It forces you to, okay, is this really going to go down? Well, this low has been absorbed, and so is this one. It's got to blow through that for me to be totally offsides. And I think I can pull some profit out of it before it does that, even if it's going to do that. So, maybe bring a few of my targets in and start taking some profits more aggressively, can do that. Put a couple more limits right around that high volume node. You see what I mean, guys? This is just such a good way to practice, the ebb and flow of the energy of the market without, having any money or skin in the game. And now I'm taking profits. So, that read was correct and I can protect it if I want. Again, the rules are for me that you make up your own rules, because what works for you is what matters. Okay, let's flatten that out. Let me go to the questions and comments, and then we have just enough time left for me to throw some other resources at you. Absolutely, Maria. And a lot of what I'm talking about now, when I say you have to be at a certain point, is directed at people like you, because you are at that point. You're profitable, you have a good edge, you've withdrawn money, which is so cool, particularly from the accelerators, which are really hard to do that. So now your mission is to get better. And as you get better, you can trade more scale and make more money doing exactly what you're doing now, nothing different. But that really takes psychological confidence. And the only way you can get that is to practice your edge. And so, again, the drills I've shown you guys in this course so far, the review today and the previous sessions, these are a bunch of different ones I like for a variety of reasons. Let me summarize. If you want to just get practice with understanding order flow, the one tick drill is absolutely the best thing to do. That's where you start. And then the cut and reverse or always in drill. We talked about that in a couple of sessions ago. That's a really good one to just practice your overall read of the market. And then as you become a better trader and you become more experienced, then I think the range drill and sitting on hands drill and the lean in drill become really, really useful, because what you're doing at that stage as a trader is you're growing your profits. You're not trying to become profitable. And those are very, very different things. Okay. So let's see. The last thing I wanted to show you, and then, if there's any questions or whatnot, and I'm doing this with mixed. Okay, you guys all know me pretty well. If you've been around at all, we have a couple of guests that don't know me that well, but I am very straight shooter. If I call it like I see it, if I think somebody's off, I will say so. If I think somebody is ripping people off, I will name them and I will do it publicly, okay? This is not that case. I'm going to show you an example of a really good resource out there, and I don't have a bad opinion of this other than the individual who runs it, and it's a personality thing. So what I'm talking about is this Price Squawk, which is a tool for audio price alerts that I think is distracting, but there's certain uses of it that are okay. I've tested it. This guy has it, Graham is his name, and he has this tool, and he has a really good list, and they're very overcomplicated. And, again, if you're going to do a website on it, it makes sense to overcomplicate it. But here's a bunch of other drills. Flipping a coin, I think Robert brought that one up last session. These are all interesting, and you got to give them your email address to get through all the different pages. And I want to be really clear here. I think this is good material. I have a personality conflict with Graham, and it's old. It's like 5 years ago. Basically, when you bought Jigsaw, with the first releases of Jigsaw, Price Squawk was built into it, and it still is. And the problem was, it's an old version of Price Squawk. If you click on the button to try it, it crashes all of your workspaces in Ninja. And this was a known bug. Anyway, long story short, Graham just like, so you could no, he didn't say that. He said, I emailed him about this, and I said, you just blew, like 40 workspaces and a ton of work, and they're backed up, but it's going to take me hours to rebuild this. He's like, I can rebuild a workspace in 5 minutes, dude. That was his response. So that's the kind of individual you're dealing with. On the other hand, he has some good material. So I recommend the material. I don't recommend the service. And I think it's way overkill for everything but certain kinds of prop trading that none of us here are really doing. So, but I think the drills he has and the conversation around each one is really good. So, for example, if you go to his always in the market drill, I told you how I do that one. He goes through a lot of, here's all the different rules and here's the way you do it. And okay, that's fine. This one is a really good one, by the way, if you want to try something I didn't talk about. Averaging in is interesting. That's kind of like swarming, but again, he's doing it a little bit different. And then legging. This is a real advanced kind of thing. And I think this is a good exercise. Hedging and position size, it forces you to do a lot more math. But again, if you're further down the road, it's worth looking at. And he also has some good references. He references Grady in here and a few other traders out in the space. So again, endorsement of the material. I don't have anything against Graham, but that's just not how you do customer service, and I wouldn't buy anything from him. But he has some decent material. And again, my mission here isn't to be your only source of information. It isn't to be right. My mission is to give you good resources and to be a resource for you. And in that spirit, I'm presenting this page. Okay, let's see. Yeah, can you believe that? Yeah, he crashed 40 workspaces I had on a 6-monitor NinjaTrader setup that I had spent years putting together. And I was running Gomi's order flow, and and in NinjaTrader 7, it was really cumbersome to do all that. So workspaces are really important, and even if you back them up, it's still, you have to rebuild them and blah blah blah. And anyway, he was just, I could do that in 5 minutes. I'm like, okay, dude, here's my 40 workspaces. I'll let you remote in. You can rebuild them, and I'll watch. And yeah, we didn't hit it off. Anyway, he's Australian, I believe, or New Zealander. This guy Graham, and again, other than this, he's a fairly well-known guy, and there are people that like his software. So again, I'm not ragging on him. That was just a really bad way to respond to that. And you at least show sympathy and say, "Oh shit, sorry, that's an old version." That would have been the right answer. I'll see. Is that what he is? Okay. Anyway, so let's see, Maria. So if this is a great question, Maria. So if you're a one-trick pony, so to speak, at what point do you give up working on that trick and start incorporating new stuff? Here's a short answer to that, and then I'll go to your other 2 paragraphs before I even read the other 2 paragraphs. If I were you, Maria, I would be a one-trick, God, that's hard to say with too much coffee. I would be a one-trick pony with more size. That's what I would do. I wouldn't try to learn other tricks yet. In my experience, people that are good at one thing and can make money doing that one thing should stay focused on that until something else just looks like, oh wow, that I could do that too. And for me, that's really the power. And I'll give you an example really quickly. I have always faded the edges of ranges. We get to the edge of a range, I want to go the other way. That's just my contrarian personality. I was not ready to use structure to learn when not to do that for like 7 years of looking at footprint charts. And then when I met Lee and I understood how he looks at unfinished business and the initial balance and the rotations, I realized there was a way to game my fading of the edge of a range by using that information. And what that impact on me and my trading, it became a new setup. I not only had the one of fading ledges, but I started going with ledges too. So that's the answer, Maria. Focus on what you do well. Second part, is it even necessary? Yeah, I think I already answered that. I think particularly for you, with Rugrats running around and a household to run and all the other things you're involved in, I would look more at scaling. And I'm doing that right now in my, you guys have heard this before. I do a 50K and a 150K risk management. And the only difference between them right now is instead of starting with 1 micro like I do in my 50K risk management, I start with 3 in my 150s. And my 150s, make a lot more money. And that, but it's exactly the same setups, and I'm running them roughly the same way. So when you do scale, you get to be a little more flexible. That's both a pro and a con. It can make you money, but can also cost you more. And yeah, exactly. And then your third paragraph, you beat me to it. That's exactly the right thing. Work on your mental, work on your drills. And one of the things to learn about scaling that's really important is there's certain days you don't want to scale. Today was one of them at the open. I tried to scale into it and I got caught off sides and had to flip over and get right. And I scaled down immediately. And that kept me profitable because I said, okay, this is not a day to really, go for big size. And then as the range developed, I went back up in my size and I had a couple of really good large scale short range trades. And so, it's a dynamic situation. And if you if you start the day small, scale up when the day is working well, and scale down when things are crazy, and when it's an outlier day, then that is absolutely the right path. I totally think you are thinking correctly. Yeah, and Robert reinforcing that well. I think yeah, the next two paragraphs. As you know, Maria, I speed read, and it's really annoying for people if I read your whole 3 questions, 3 paragraphs, and answered it all at once. I would have just said, yeah, you're right. That's how my brain works. So I have to break it into chunks to actually focus on each piece. So yeah, I that's why I didn't read it all together. And you concluded absolutely the right thing. I could not be more in agreement with you. Okay, so let's see. What else do we have? We are right just a couple of minutes over what I had planned, which was about a half an hour. Are there any questions, comments? I think, if you're not convinced you should be doing drills, then you shouldn't be a trader. How's that for an unequivocal slap in the face for anybody not doing drills? I'll say it again. If you're not doing drills and you don't think you should be, those are 2 different things. There's people that aren't doing them. They say, yeah, I should do that, and they just haven't gotten to it yet. Okay, that's fair. But the people that say, no, I don't need that. I have my, Algo Box 9000 telling me what to do. That the faster you leave trading, the latter, the more money you'll make, because you'll save the money you're going to throw away thinking that way. And that's a really important point. So think about what you do, and here's a challenge for all of you. It's a personal thing, so I won't ask you to turn it in or anything. But here's a class challenge and a homework assignment. What drill of the ones that I mentioned, or what drills in general, maybe not one I mentioned, will improve your trading the most? Give that some thought. And, if you have an accountability partner, maybe run that by them. What is the one drill you could do over the next month or 2 that could make you a better trader? I remember when Amy concluded, she was in the first workshop, and in 2019, I remember I showed the 1 tick drill after one of those sessions, or during one of those sessions, and she said, I really need to do that. And Amy went out and did the 1 tick drill like 10,000 times. I mean, she was doing it 1,000 round trips a month or more, and of 1 tick drills. And she was sending me the printouts and stuff, and I was like, this is so cool because you've got this exactly right. And now look, she's funded at a bunch of different places, and she's trade copying and making lots of money, and that was the foundation of her kind of understanding of order flow. And now she's learning a lot more about structure and the stuff Lee does. And it's a really powerful place to start if you're struggling to be consistently profitable. And that she had been profitable and traded for years before that, just had never found a day in, day out consistency, and that got her on the path. So okay, yeah, range drill is definitely a good one. Range drills are also really, really good. I see a number of you commenting on this, of the, where are you wrong? That's something I still struggle with, the where am I wrong argument when I'm trading a range, because range boundaries often get, like, well, we just saw it. They get exceeded a little bit, and just enough that everybody's trading the range bails out, and then we go back into the range. I mean, I just did along on that very premise. And it took me a good decade to really understand why that was that way, the psychology of that, and that, that was absolutely right. And that's why you can't just say, well, support is at 50. If it breaks 50, we're going down. I hear that crap nonsense all the time. No, if it breaks 50, they're going to take some people out. We'll probably trade down to 47 or 45, and then we'll go back up to 50 or 51 or 52 like we did. And that's really typical. So, if you have a style like I do, swarming and scaling into those events, then you really have to practice, okay, if you're scaled in, where are you wrong? Because if you keep scaling in and you keep being wrong, you can end up really, really far off sides. And that's why, like the always in drill is a really good way to practice that, but it doesn't teach you as well about the ranges. The range drill I really like because do it this way, at least, whatever other rules you add, define the range, either use the LRCs or use the DOM or any way you want to define the range. And then when you get to the edge of the range, you have to trade it. Short or long, it doesn't matter which edge of the range, it doesn't matter, but you have to trade. Try doing that for an hour or 2. It's really, really good practice, teaching your brain about being wrong and the little blips in the market that can fake you out. Yeah, lean in is also really good. And for you, Robert, absolutely. I'm reading the ones you guys are putting up. That's really good for where you're at. Absolutely. Let's see. Has anyone tried a one tick drill or three tick drill with a trailing take profits? Well, the problem with that, Valente, is it defeats the purpose. The one tick drill is about getting good entries. I have another drill I haven't talked about, which is a two-lot drill. And this might be a good one for you to consider. And again, this is why I encourage you to design your own. I designed a version of the one tick drill, which I call the two-lot drill. And it's designed for ES because ES tends to move in 2 or 3 ticks and then reverse. So what I do in that particular drill is I trade a 2-lot and I try to get the first one off in 2 or 3 ticks. I do it, either with a limit order or do it with discretion. And then I try to protect the runner. So I'm practicing taking fast profits and protecting the rest of the trade. That might be a good exercise for you based on your question. That might make some sense. Let's see, for me, low entry MA, yeah, that absolutely entry. And the one tick drill is all about that. How much can you get to $500 or keep your MAE below something? That's an absolute way to do it. And then the range drill is only about MAE. And forget profits. Can you keep from losing money doing that? Because if you can do that trading ranges, you can make money. Because the trick to ranges is about learning where you're wrong. Staying in the range is really easy. It's really easy to fade the edge of a range back into the range. That's just logical. But if you don't learn where you're not right anymore with respect to ranges, you won't be consistent at that. You'll have a lot of winners and then a giant loser and then a lot of winners and then a giant loser. And if that's what's happening, that you need to practice understanding where to be wrong. Yeah, I know you do. I've heard your comments before, so I think that really is a good one for you. Yeah, a 2 or 3 tick drill, Alessandro, that's another interesting one. And if you look at my little predefined brackets here, I have a couple of those. I have a 2 tick, a 3 tick, and a 4 tick. And so the 2 or 3s are interesting because of the wee ES moves. Like right now, let's see. Let me look at the order flow real quick. I'm going to do a 3 tick long right here. Okay, so there's a 3 tick long drill. So let's, and I'm operating under the premise we're moving up. Okay, there's 2 of them. I just got 2. That's another good exercise, but that is only good when you can do the one tick drill well, because the one tick drill is about the entry. That's about the exit from the entry, right? And so it just takes you to the next level. I love these comments and questions, guys. You guys are totally on this topic. You're dialed in, and that's great because that's what you have to do. This has to be fun. And otherwise you won't do it, and it has to be something that trains your brain to do something that you need to train your brain to do. So consider that. What am I not doing well? And which drills of the ones that we've talked about, or what drill could I develop that will make me better at doing that? And I always go back to sports. Think about sports. And I said this in one of the other sessions, but let me just review really quickly. I was a sprinter in high school and college, and a reasonably good one. But I'm physically not that big. I'm 5'10" and muscular. But sprinters tend to be 6'2" and longer than me. And so early on in my career in high school, I was competitive at the state level, which was really a big world. And it was really hard for me to stay positive because, I was competing against people that were faster and bigger. And I had a really good coach. He said, your advantage in this whole game is to get out of the blocks first. And particularly when I started running with a 4x400 meter relay, I started it. And the start for that race is on the turn. So smaller people have an advantage. So we would try to get an inside lane, and I would try to get a quick start and use my smaller stature against the taller runners to my outside. And it worked really well. We got to the state qualifying meet with that strategy. So that's a really simple example. So how did I do that? It just like, practicing free throws. My coach had me doing starts all the time. When I was tired, he'd say, okay, get in the blocks. We're doing starts. When I came out of the locker room right at the beginning of practice, okay, in the blocks, we're doing starts. Just all the time. And so it just burned into my brain, how to come out, how to lift my knees, how to change the angle of my body, keep my wind resistance, all the stuff you do. And it got to the point where it was just so mechanical that it was really my strength. I could beat anybody out of the blocks, no matter how big and strong they were. And that was a huge advantage. But I got to tell you, I must have done, well, I started doing it when I was 11 in junior high school, and with that coach when I was 12. And by the time I was 15 and in high school, gosh, I must have done maybe 2,000 starts. I mean, I did dozens every day, so do the math. That's how you get good at something. Having an issue, I'm reading your question, Steve, entering only when I get, okay, yeah, see, this is the problem. Okay, I stop right there. What's define confirmation? You're thinking like a technical analysis trader. And their confirmation is always late. It's not usually late. It's always late by definition. So there's a fundamental error there. You're thinking like a technical analysis trader, Steve, and that will always be late and often wrong. But if it's right, it will always be late. So what I would do in your case there is I would go back and break down the setup. What setup are you trading? And what is the signal you think you're taking? And what is the confirmation you think you're taking? Because you have to eliminate the confirmation part and look at the odds, the thinking and bets on the signal itself. Does that make sense, Steve, what I'm saying? You have to be more aggressive with your decision. So I'm either right or I'm wrong. Not I'm right, but I want my platform to tell me a few minutes later that I'm right. That's what confirmation is. And that's why it's such nonsense. It's so wrong, because you're waiting for something in your platform to tell you, okay, that thing that I thought 5 minutes ago or 2 minutes ago or 30 seconds ago is still true. And again, by definition, you're looking backwards if you do that. That's why by drills and staying in the vertical movement is critical. One thing I would suggest, I have no idea what you have on your trading platform, what you're looking at, Steve, but I would try just trading on the vertical, whether it's with footprints or the dome, and I would get rid of every chart you have. That's how you break that habit. Yeah, I think, look, you can always go back to it, right, Steve? And this is an example of one of the drills I mentioned. This is the do something the other way drill. Try to trade like a dome trader without a chart. See how it goes. What do you got to lose? You might just find that a light bulb goes off. You have an aha moment, and there you are. And there's a lot of people in TRG that'll tell you that happened. Maria's one of them. I know there's a number of others. So that's my feedback on that. And it's a great question, by the way. You're willing to challenge yourself, and I like that. Most people just say, no, my indicator's right if I just work the trade. And that's so stupid. You don't work the trade. You take advantage of the odds of your edge, and the odds of your edge are the odds it works or it doesn't. There's no work the trade. You don't wish a trade into becoming a profitable one when it's not. But boy, that's the mentality. Oh, you have to look for a 3 to 1 R to R. And if you're in your trade and you're only at 1 to 1, then you need to stay in the trade and let it work. And that's just such crap, because it totally disregards the market that is an active auction going on in front of your face while you're thinking in terms of what happened 5 minutes ago or 10 minutes ago or half an hour ago or yesterday. So yeah, they do keep coming. That's the beauty if you have a good community, Robert. The aha moments keep coming, even for me. I mean, frustration about the inconsistency of my swarming of my ledge break trading, particularly with blocks of micros, led me to develop the swarming idea and to test it with my buddies trading supercomputers, and that led to a bunch of refinements. And it's been uncanny how much more profitable it is. I told you guys this when I discussed that in risk management. It was an 80% improvement, almost double my profitability, and it has been since then, since that one change. So there you go. And that came out of a drill. Don't spend a load of cash on it. You can get a lot of things very cheap. You can trade, you don't necessarily need a lifetime ninja. Absolutely. Don't spend money on that.
Avoid that one, in fact.
Yeah, avoid that one. If I could get it back, Steve, I would. Jigsaw's worth getting, and he's got a real big sale going right now. There's a post in the pit on that. Maybe you could share that post, JVC.
coming right up
into the chat. But I would look at Sierra also. Are you on Sierra, Steve? Because you can get a good Sierra setup for like $60 a month, and it's really powerful. There's nothing it can't do. It's just a long learning curve. There's a link to the Jigsaw sale announcement. If you're interested in Jigsaw, please use that link, because we are affiliates and we get a little money back, and we put it back into TRG in a variety of ways. Our members have seen us doing that, so please. It's actually $46. Oh, you're talking about for Sierra chart? Yeah, depending on the level you're at. I have the package with the pullbacks and all that, and it's a little bit more. I think it's about $60, $55. But there's so many different versions depending on whose data you're using and everything. But yeah, it's a good deal. I would not buy the Lifetime Ninja though, Steve. There's really no advantage to that. Everything that's in it you can get elsewhere, in my opinion. And I have it. So, I only use the tools in it when, because I have it, but I found duplicates out in the space. Boy, if I were you, and if you're looking to not confirmation, Steve, have you been to Lee's classes on why price moves and the different absorption and zero prints, all the different structural classes he's been doing? Have you been to any of those? Have you been through that series? Yeah, okay, because that should give you some really good ideas of where setups occur and what they look like, and not needing an indicator to for example, seeing price rejectors. Jigsaw is really powerful if you're going to scalp the way I do. I think the execution tools are instantly worth it, but if you're not a real active scalper or active trader on the dome, I don't know that I love Jigsaw, but I don't know if that would be my first $500 purchase. I would definitely invest some time in developing a decent Sierra chart setup. Yeah, I'm agreeing with those comments. But again, you guys see I use Jigsaw, and if you're going to trade aggressively on the dome, it's a great tool to have. While it's on sale, not a bad thing. But if you had to just pick one, Steve, I would invest your energy right now into Sierra. And again, I'm running it too. You're not seeing it on my screen, but I run. Here's the footprint I'm running. that was part of the reason I liked the long down there, was we took out that old UB down there, and I'm also running. When I post my TPO views, this is Sierra. I use Sierra mostly for context. The footprint charts, the TPO views, because it does that absolutely better than anything else. Yeah, it is a lot of effort. But you know what? You got to make a commitment to your tools, Steve, or you're never going to get to where you want to extract money from the market. It's like if you're a carpenter or a plumber or any craftsman of any kind, your tools are the most important thing you have. And yeah, that arbitrary pressure, it's really, especially if you need to make money, and that's hard. But I would submit to you that it's still a good decision. And to try to back burner the rush to make money, because that will always hurt you. It really will. Good conversation, guys. Great questions, great comments, good class. We went almost a half an hour long, but I'm glad we did. By the way, this is another one of those same setups that I like. So I'm going to go ahead and buy this. I'm in Sim still. You can see I'm doing little quick drills here. This is my little 3-tick drill, and I just did one and got filled, and then I'm about to get filled on my next one. That's a really good example, place to do stuff like that. Let's flatten that out. I think I might go back to real money and buy this here. Looks like a decent spot. Let's go to one of my funded accounts that I'm copying from, and let's grab a couple. Oh, I don't want those brackets. Damn it. That screws up the copier when you have brackets. I forgot to turn the brackets off. Hang on. Make sure I flattened everything out, and I did. Okay. So let's see. Thank you, Robert. Appreciate it. And also a couple of other things about Sierra. JVC is a really good resource for Sierra, Steve. He does a class on various Sierra things for TRG folks, and answers questions in the pit all the time. And he's available as a consultant too if you want to fast track a little bit. So
yeah, and there's a lot of Sierra users in TRG, and we're always happy to help out. I mean, the first thing I do when people come to me and want a private session is usually explain to them why they don't actually need a private session, and here's the answers to their questions. And then only if we get beyond that and they still want some time to go one-on-one over a specific deep thing, like, okay, sure, no problem. But usually I just, here's your answer. Off you go.
Okay, so we'll go ahead and wrap up. Thank you for all the great feedback, guys. I really appreciate it. Can you connect the rhythmic? Oh, absolutely you can. It's just not as simple as it is like with Jigsaw. Jigsaw, literally, look at my drop down. I have all the different evals and accounts all connected at once. You can't do that simple, but yes, you can. And again, JVC can show you that he's done a really cool thing with just multiple instances, which you can't do with any other platform. That's a simple way to do that. That way you don't have to keep reconfiguring it. So yeah, Steve, just reach out to the other guys in the pit and they can give you some support on that. That's why we're here. That's the value of the community. Absolutely.
Precisely.
All right. Thank you, everybody, again. I will see you for the closing session today. It could be a good one. We're pretty big. Robert 9000, exactly. Let me show you real quickly. This is another view I just made in Thinkorswim of the extremes, and we're getting stretched away from the VWAP, but there's volume down here. So if this continues, we could have a really interesting setup for the close. I think today's close is going to be great anyway. Most Fridays are, but this is starting to set up to be a good one. So we'll see how it goes. I'll see you for that session. That's noon my time, 3 p.m. Eastern. And I often start it early if it's already active. So keep an eye out for an announcement. That room may open early. All right, we're out of here. Thank you, Steve. Great questions. Thank you, everybody else. Thanks, JVC. As usual, we'll see you guys later.
Catch you later. Bye, gang. Bye.